support and resistance. Support and resistance are probably the two most important words in technical trading. Support is a level or area with a surplus of buyers that acts like a floor, causing price to bounce off it and reverse. Resistance is an area or level with a surplus of sellers that acts like a ceiling that causes price to bounce off of it and reverse. Support and resistance levels are based on historical pricing. When price stops and reverses, it forms a support and resistance point. There is an increased chance that, if price hits that area again, it will stop and reverse again. Furthermore, if price has stopped and reversed in the same spot more than once already, if price hits that area again, the chance of it reversing again is even greater. Sometimes trend lines act like support as well. When this happens, price bounces off of the trend line. Often price will channel between two support and resistance lines or two trend lines. What causes support and resistance? Why does price sometimes seem to magically reverse at the same price over and over again? There are lots of different thoughts and theories on the subject. However, what it comes down to is that support and resistance happens because behind the millions of trades each day are millions of traders. Markets are not made up of price charts that move up and down at random. Markets are made up of people that think and feel and have emotions. Furthermore, markets are not just made up of people, but of crowds. Crowds act very primitive. They lose the ability to think individually. They search for a leader. They act irrationally. They follow the same patterns, and they repeat themselves. In short, support and resistance happens because markets follow patterns, because markets are made up of crowds, and crowds follow patterns. Drawing support and resistance lines is not complicated. Usually this is achieved by simply connecting two or more spots that price reversed on either a horizontal or a slanted line. There is no one correct way to draw support and resistance lines, and where the lines are actually placed is a matter of personal preference. Some traders will connect the extreme highs or lows, like right here. Others will just use the bodies of the candles and ignore the wicks. And still others, although not as common, will simply draw the line right through the thickest cluster, hoping to get as many people as possible included. Each trader must find what works best for them. Support and resistance works in both directions. When price breaks through support, it becomes resistance. When price breaks through resistance, it becomes support. When price is inside the walls on the channel, the walls help keep price inside the channel. When price breaks through the walls of the channel, the walls help keep price out of the channel. There are other forms of support and resistance as well. Whole numbers, moving averages, pivot points, Fibonacci numbers, and more. Typically, the more times price respects a support or resistance level, the stronger that level is. However, there hits a threshold at a certain point where price has respected the area so many times that the area begins to become weaker and the chance of breaking through begins to increase with each new approach. As price approaches support or resistance, traders will use volume and momentum to gauge whether they feel price will break through support or resistance or bounce off in reverse. Since volume is not available in spot forex, traders will sometimes use the volume from currency futures as a substitute. As price approaches support or resistance, is price gaining steam with the volume increasing, or is price losing momentum and volume decreasing? The support and resistance lines on a longer time frame chart will be stronger than the support and resistance lines on a shorter time frame chart. For instance, the support and resistance lines on a weekly chart will be stronger than the support and resistance lines on a daily chart, and the support and resistance lines on a daily chart will be stronger than the support and resistance lines on an hourly chart. The support level on a 15-minute chart probably isn't going to cause the price to change on a daily chart. However, price on a 15-minute chart may bounce off of a daily support level. Over time, older support and resistance lines tend to fade in strength as older traders wash out and leave the markets, and newer traders enter the markets that were not in the market the last time the support and resistance level was respected. So that concludes a basic overview of support and resistance. This is the end of the first video on the subject. In the next video, we'll cover the support and resistance price cycle. See you then.